Gold last week traded bearish and has achieved 1810 levels. And if you recall, we have discussed why these levels are important. Let me show you in detail here. See 1810, 1810, precisely achieving the levels. It has seen a good recovery and closed the week at 1832. Now, what to expect next week from gold? Which position you should take in order to profit? Is it going to reverse from here? Or we can again expect a red candle here. Which position to take? We will see with the help of charts first, followed with indicators, and towards the end I will give you the trading levels and strategy to make profit next. Watch till the end. Let's start first on the weekly charts. If you look at gold's behavior so far, you will find after the triple bottom there was a strong rise, then the retracement, then the all-time highs here, and then again it is trying to retrace. Now remember, the previous drop and this drop has achieved couple of objectives here. First is to fill the gap here. There was a gap at 1867.70 which it has filled in the preceding candle, and last week's candle has achieved the triple bottom levels which was created here at 1810 levels. Now precisely from the levels it has tried to retrace now. Also, if you look at the candle last week, you will find the body is less than half of the complete move, which is suggestive of that the prices are not willing to stay bearish. Now what can be expected next week? As you can see, one bearish candle, second breakout candle, but with a flat opening, but with a smaller body. This suggests that the prices might try to lift a little or might try to retrace a little up before looking forward to any downside move. Now how far it can retrace? Let me just show you, creating a trend line here. Now if you just connect the lows out here, you will find 4 to 5 candles respecting this trend line here. This is suggested there is a very strong support existed around these levels. And if you just draw a parallel to this, you will find the highs, the lows, the highs, and then the lows. So this is second cycle which is completing from here. So can we expect it to retrace towards this zone in the coming future? Possibility exists for this. And as much time as it's gonna take towards 1900, the more the downside it will create. Now if it continues its upward journey from here, see first resistance at 1850, then 1865, and then 1880. Three major resistances exist. Beyond 1880 is may try to achieve 1900. So these are the four major levels which we should look out for. In fact, 1880, 1885 zone, very good resistance exists there. And if it breaks past that, then only further bullishness can be seen. Now if you look at the candle, it can try to yield higher lows from here and higher highs. So we may see a slight retracement channel getting created here for a couple of weeks before it looks forward to any downward move. That is my expectation here. Now does this mean that the bottom for the gold is done? We will see with the help of indicators, but so far it appears that it can try to retrace. Even if it has to look downwards, it can try to retrace a little on the upside. Now this is purely on the weekly charts. Let's have a look at the daily. Now on the daily charts, look at last three candles. Yes, there was a reversal sign. Indecision was seen, and then this is reverse. This is the first green candle of the series. We may probably look forward to a second or third subsequent green candle from here, which can take it. If not, it may try to completely erase the losses in this series, but it can try to at least retrace towards 50 to 60%, which makes it at around 1880 levels. Possibility exists. Specifically next week, the beginning couple or more candles you should watch out for. It can try to retrace, and hence the bullish momentum may proceed. If you see gold staying above 1836 and 40 zone, just stay long. We are looking forward to 1850, and see 1850 once it breaches, certainly more bullish momentum is going to follow, where we will look forward to 1850, 1865, 1880 levels as well. Yes, it has the potential to reach towards those levels. If you create a Fibonacci for the last 1 month's move in gold, you will find, see 1865, this is also not only coming from Fibonacci, but it is indeed, and then 80, 85. 80 coming from these two candles, 80 to 50% retracement, definitely gonna be the stronger resistance, and as I said, 1900. So yes, these levels are going to remain crucial for gold in the coming few. Now let's have a look at the monthly. On the monthly charts, see the candle has opened flat, it is retraced, it is dropped towards 1810 levels, almost the same levels from where we have seen this rise. It has erased all the gains and now trying to show a pullback. Now since it has started flat, there is a probability that it may try to show a little pull on the upside, where you can see the candle has started almost close to 1850 levels, $40 of move below the opening, and hence it can almost show at least $40 of move on the upside, which is almost 1890, 1900. So yes, there can be a pull and on the upside, and if it tries to retrace on the upside, we may possibly see 1880, 1890, in fact 1900 levels also before it looks over to any downside move. Hence, yes, a retracement is possible. On the upside, we are looking forward to a little rise in the coming few trading sessions, and at those levels, we will see how it behaves. It is certainly not breached the bearish trend which it is following, but a retracement on the upside can be expected from here. But let's have a look with the help of indicators. What does the indicators are trying to say? First, let's have a look at the monthly charts. On the monthly chart, the moving averages, after staying divergent, after staying bullish for months, see the 20 and 50 crossed over here at this point few years back, and since then gold has stayed bullish with divergence. After a little while, it has now started to converge a bit. The 50 months average is sitting at around 750 levels, which is certainly a very good support. See, 1780, 1750, below 1800 are the two major support levels which we should look out for. But right now it is trying to retrace, and on the upside, look at the 20 months average, again 1860 might give it a little resistance. But let's have a further detailed look. See, stochastic has dropped to oversold levels on the monthly charts. Interestingly, the MACD has just crossed over on the monthly charts. It has seen the first red candle, but at the same time, remember, if it turns green from here, if it reverses from here, this may again start to diverge, which is a good sign for the bulls, as you can note that this crossover has come after, this bullish crossover had come after long time, and since then it has just stayed in green for a little while before crossing over, and hence this also causes increases the probability that we may see it receding on the upside, and a reversal is possible from here. If you look at RSI, this is looking downwards, trying to stay bearish. Coming to the weekly chart. Now look at weekly charts here. The crossover here was important since then, in the beginning of 2023, and since then gold has stayed bullish. Now after a long while, it is moving averages has started to converge, and now the prices are below the 20, 50 and 100 weeks average. This is important. After a long while, we can see all the moving averages above the price, and price is staying bearish. This was the last time when it has happened, a crossover, and then the bearishness prevailed here. Likewise, right now, moving averages have started to look downwards. If you look at, also one important point on the weekly charts is the prices staying outside Bollinger Bands. Now, staying outside Bollinger Bands, one thing is for sure, that the Bollinger Bandwidth will expand when the coming week opens. At the same time, it will increase the probability for gold to fall back within the bands here and try to stay within the bands for a while. Next is the 100 weeks average, and 100 months average is almost, and 50 months average is almost at 1860. This also makes 1860, 65 as a greater resistance, and then 1900, the 50 weeks average. If you look at stochastic, this is hit a bottom here. It has not gone to oversold levels, but it has hit a bottom here. If you look at the MACD, now look at MACD, this is trading divergent and bearish. It is followed, after the crossover, it has followed sharp bearishness. Now let me show you something on the MACD here. See, first wave, this is complete. Now the red part of this wave is complete. If it is crosses over from here, look at the formation, higher lows, and if you connect the dots here, higher highs. Now though it is still a little probability for it to continue on the downside to the bottom and then retrace on the upside, it may completely cross over and continue towards the top of this. We have to just wait and watch for the next candle to start. Now also one must note that there is too much of divergence, which probably calls for a little conversion. This suggests that gold prices might retrace a little from here. RSI looking downwards, trying to stay bearish here. Coming to the daily chart. On the daily charts, an important factor is the divergence in the moving average. It's all looking downwards, trying to stay bearish. Second point is the divergence of the price from the moving average. This calls for it to converge towards the moving average at least, which suggests that we may see possibly prices moving towards 1880 levels in the coming few trading sessions, where we can observe moving averages trying to stabilize somewhere here, and the price is moving towards this zone. This is what I will be looking forward to in the coming few trading sessions, and hence a retracement and a rise is expected. Stochastic rising from the oversold levels, trying to look upwards. Now look at MACD on the daily charts. Extreme divergence here. This probably calls for it to. It does not mean that it cannot. See, when it was bullish, it has achieved extreme highs beyond plus 20. It is almost gone to plus 30. levels here before looking forward to a down move. Likewise here also it can continue. However, for now look, the red candle is diminishing here. The divergence is exceeded, and that is why a little convergence can be seen here. If you look at the daily formation also, one wave, see this is the bearish part, lower lows are done, so lower highs and can be expected, and that is where I can suggest that possibly we may see a little retracement. That is my expectation. Again and again, all the charts are reflecting on the same part as of now. We have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you for next week. And before I summarize my observations, if you want to learn this art of trading, you can join my 26th mentorship batch starting 9th of October. Only limited seats are available. Register yourself now itself. Reach out to me for more details. Remember, invest in your learning first. This is the only investment which can reap the profits to you throughout your life. Reach out to me for joining the mentorship batch. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals group, and you can join the free Telegram channel to get the live market updates. The free Telegram channel link is mentioned in the channel and video description as well. Now let's start. And yes friends, before leaving the video, just press the like button, do share, do subscribe and comment as well. Your every like, share, subscribe and comment is a great support, motivation for me to deliver daily analysis and targets for gold and major global markets and commodities. With that, let's start. First thing is the levels. I will recommend you to buy at 1836. Wait for it to break past 1844, the next resistance, 1850, the third. And once it stays above 1850, we can look forward to 1860, 63 zone, which is going to be also a critical resistance zone, and then 1880 and 85. Now this is also the next resistance zone. The refined levels I will tell you as and how the price of the gold moves on the daily basis, and thus you can refer to my daily analysis for more details and more final levels here. But this is the zone you should mark out for very, very, very good resistance are or can be seen here at this zone and this zone. Thus you have to take care of this, and beyond this I will be directly looking forward for it to hit 1900 levels. Possibly next week we may not see these levels, but yes, a little retracement on the upside can be expected towards 1860-65 or 1880 levels. Now let's say even if it has to achieve 1860-65, there could be a possible achievement of lows there at around 1815 before rising towards the zone. So this is where on the down you can sell here at 1828, but then be careful. I am again saying you at 1824, 1820, and then 18, see 1820, 18 14, 15 zone. This is completely going to remain a great support zone for next week. If and only if it breaks below this, you can again expect 1810, 1808, and breaking below which, possibly breaking below which we are looking forward to. You have to just stick to the levels. Breaking below 1808, we can look forward to 1800, 1795, and then 1780. Now this is also important, this is also important, and these levels are again important. So as long as 1795 is respected, we can expect a possible bounce back in the prices of gold. Take your trades accordingly. Trade with a stop loss and a trailing stop loss. Do like, share, subscribe and comment. Do press the bell icon. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in their channel and video description. Also, do watch the daily updates as well. Definitely it will help you in your day trading decisions. And for more market updates, you should join my free Telegram channel. Thank you very much. Have a great profitable trading week ahead. Thank you.